Hello, everyone! Welcome back to the RationalInvestor.com's Daily Brief Recap. Brian just keeping it real, being himself. And you got to remember, everybody, the only reason why I'm doing this is because I'm having fun at this. And as soon as I stop having fun with this, I'm not going to do it anymore. So as long as I'm having fun and doing crazy voices and just being real and being true to myself, then this is not work. It's actually my passion and it's what I enjoy. And if you don't like my crazy approach, you don't have to follow me. I won't be offended. But the long and short of it here is, as long as this is fun and I have all these cool people all surrounding me that say that I'm making a positive difference in this world, then I'm just going to keep on doing my crazy thing. All right, let's get on with market talk. 10-minute recap. It's about there's a bling from the Duke, one of these awesome people that surrounds me, saying, "Okay, Brian, enough of this nonsense. Let's get on with the show." No, he didn't say that. He actually said, "Great intro." So. Okay, first and foremost, and kind of like what we started the conversation off yesterday, you can really feel in the market today, everything has just stopped ahead of the Fed. So the whole market's waiting on the Fed, and of course we have our risk on, risk off conversations first thing in the morning, just to try and get like sort of a tone or a feel for what we're seeing in price action. Bit of cleaning up, probably position squaring, things like the gold, the bonds, catching a bit of a bid here this morning. Yen still can't really find a bottom, but maybe a W comes in through all this. Tough to say. And then on the other side, stocks jumped up, Bitcoin jumped up, crude jumped up. So we're seeing a bit of pullback, the risk on bet. Who's going to take a big risk on bet heading right into the face of the Fed? Probably not a good idea. And interesting enough, we sort of reviewed this in the daily brief today. Historically, actually, think of the market as a forward discounting mechanism. It's such an important concept to try and learn. If you don't understand it, maybe you ought to get into TRI's school and understand what forward discounting mechanism really means and how people and sort of our humans' psychology around this concept. But in today's broadcast, we talked a little bit about how historically what I've found, and keep in mind I've been at this for like 30 years, and 15 years of it, it was a broker sitting in the pits. And, hell, I was trading on the CME floor for a while there. So what we often find is that if you know that there's a big fundamental news event coming, you have to ask yourself, okay, is this a buy the rumor, sell the news? Or is this a sell the rumor, buy the news? So if you are actually a stock market bull, then you actually do want to see the market down into the Fed event. Sort of sell the rumor, and then the event happens, buy the news. Which also doesn't lead a lot of confidence if I see bonds and gold rallying into that event. Maybe that's sort of hopium that maybe they're going to get some news that's going to help them. Is this a buy the rumor? And then on the other side of the event, sell the news. So be aware of that. And like I said, for stock market bulls, and also too, if you don't know this, just write it down now. Don't trust the first hour following a Fed policy announcement event. Just don't do it. This stock market will be all over the map in that first hour, and it will sucker you into either going long or going short through that initial knee-jerk reaction. And 9 times out of 10, it's the exact wrong trade to take. So, good to see risk on is backing off into that event. Hopefully a sell the rumor, buy the news scenario, and we can continue working our way higher following the Fed announcement. We'll see how it goes. Only time will tell. And what I sort of said on the broadcast today is, with the Fed announcement later on in the trading day today, we probably aren't going to have really usable information until we do this whole thing tomorrow morning. And cool thing is on Thursdays we have the baby powder report. Julian does a great analysis from his perspective, and like last Thursday, he was telling us everybody on the site about how he was getting ready to short the gold market. And I gotta say, Mr. Julian, that was a pretty darn good idea. Where's our gold chart here? There it is there. So he was hitting this up here. So here comes Thursday again. Everybody at TRI is going to be very interested to see where Julian is thinking this market's going to go. All right, so I don't want to get too mired down in the risk on, risk off conversation today because of Fed. But we can see, very simply put, risk on stocks looking a little heavy up top here. Oil's backed off a little bit. Risk off, bonds are actually trying to fill in this gap here. And gold, of course, has got a bit of an update here following that nasty empire. Can't really read too much into the market until after the Fed is done. And really, probably we should see what things look like tomorrow morning. Heading on over to the stock market, we had another one of our Tuesday evenings. We have TRI SOF, or Secret Options Formula meeting. It's a club, if you will, for those people that are veterans of the site, have done all three program levels. And I only talk about options trading in detail in the level 3 program because I don't really like the public to be trading options. Extremely dangerous. So it's primarily our veterans. And what a surprise. One of our veterans had an idea at a meeting to her go, and hopefully everybody looks at this and says, yeah, I can see lots of W's here. And sure enough, Casey just got paid big time this morning on his Big 5 sporting goods. So way to go, Casey, knocking the cover off the ball and just bringing it day in, day out like an all-star. I didn't personally take this trade. Looking back in hindsight, I wish I had. But nonetheless, we've got a few retailers on the books, and everybody should look at this chart and go, yeah, it makes sense why this is happening. And then really, where are your levels? Beautiful reload zones, filling in gaps down here. And then lots of W's, the structure to get you long. The cool part about this model, though, is it just looks at entirely derivatives market information. It doesn't even give a crap about technical analysis, but when you combine derivatives market information that aligns TRI Secret Options Formula with technical analysis, W's, harmonic patterns, is the 50% rule far away, yada, yada, yada. Hopefully everybody can understand why this stock has done what it's done. Great looking trade. Way to go, Casey. Big props to Casey. That guy's going to be one stinking rich dude one day, I swear. Every single day he's just bringing it. So one of the ideas that came out of the meeting last night, and actually this is one of Kavarkinator's ideas, but hopefully everybody can see the W forming down here. And what do you think? I mean, does this stock have any room to move up here? I mean, it's got a world of room to move up here. If we do good old 50% rules, this is going back to November of 2017. So a little bit old. Probably we would be best. Actually, 52-week range, there's last November. Actually, this is a really cool chart because if anything, there, and here, let's just finish this. There's 50% of the range. I think probably the odds are we got to, trade back up against all these old highs. But this is a really good example of sort of that saucer bottom kind of thinking in the market. It usually takes time for these kind of names to turn around. So, I mean, I looked at this morning and I went, damn, that's a stone cold honky. Might be a little bit expensive up top here. I might keep an eye on, reload zone tags. This was, kind of sloppy price action. But don't be surprised if you hear over the coming weeks and stuff that I took a position in this NL. Excuse me. I'm going to puke up my coffee there. So, coming out of the meeting last night, we all took a good look at natural gas. Look at that natural gas chart. So pretty. There's was so sad. And, for the level 3ers, they get schooled on the dangers of writing naked options. And we played the video for everybody this morning. But, there was a guy who was writing naked call options through this and basically blew himself up. As a technician, I would just simply look at this and, what are you doing writing calls through this? That's nuts. I just look at this and I go, okay, well, there is that range. There is the 50% roll against those highs, kind of thinking. And then we zoom in on the natural gas chart here, and you notice that if I do, come on you, if I do a reload zone going this direction, look at that, so pretty. So beautiful little turn, maybe a little bit high. I would have liked it a little bit lower. But nice turn here in the natural gas market. Just broke out to new highs. I don't think it's a good idea to chase this thing up here. Through the broadcast today, actually, we talked about gap theory. You can actually measure. This is called a breakaway gap. This is a measuring gap. This is what's called an exhaustion gap. So actually, interestingly enough, the market itself was telling you that it wanted to top out somewhere up in here. If I did want to be a buyer now, I'd just simply adjust my reload zones and notice that basically reload zone's going to have the market come in and fill in all these levels down in here. And there's even a cheeky little gap right in there. And the cool part about this, we did this in the video today, was we walked through the seasonality, and sort of mid-November is kind of a soft period for natural gas. So into November, December, I'm going to be looking for a pullback, reload zones, all that kind of stuff. But in our meeting yesterday, and this is what I really wanted to bring to your attention, do you see any W's? I see a pretty sexy little W. And then ultimately the question is there any money to be made if I go and buy this W and just risk to the bottom? What's a 50% rule? I mean, gee whiz, just a 52-week range alone. This is, this is just going back to December of last year. There's December. We could even, I suppose, go all the way up there for now. But you notice 50% rolls, that's $7.75. Is there any money to be made here? I think so. If we just go off of these highs, and that'll take us into mid-January, so that gives us the next 3 months to play with. $6.65, and the stock's less than $3. That's a double. So there's some pretty interesting stories floating around in the natural gas market. So this is a name we're going to be watching really closely. And as we said just a few minutes ago, this was a subject of TRI-SOF meeting, in that the derivatives markets are the ones that are telling us to act here. The derivatives markets, based on their information, are saying, hey, there's probably a trade to be done here. Now I'd like to just sit and wait for a nice little technical reason to enter, and I'll probably pull the trigger. So kind of cool stuff. All right, so, a trade that's worked, way to go, Casey. A trade that's in the process of bottoming, just looks absolutely ripe, way to go, Kevin. Identifying commodity markets that are turning, and ideas in those commodity markets that we can trade to make some money, either trading options or even just buying the stock and banging out doubles. So way to go, TRI-SOF meeting. Excellent work, TRIers. So proud of you guys. And then finally we'll finish off with just a quick boo at the corn. We had postulated, first and foremost, somebody had asked in yesterday's video, Brian, why do you use the 13 EMA, 30 SMA? And the simple answer is that like I said, I've been at this game for like 30 years. And every trader has to come to their own sort of personal comfortability zone, if you will, with the tools that they use. I have some pretty wild tools that I've learned to use over the years. Modified MACD histograms. I don't like using the MACD just out of the box. Williams percentage R, heavily modified to create my Willie indicator. When I first started using a site like TradingView, you couldn't even get moving averages on things like OBV, but I am a huge proponent of OBV and the 13 EMA on there. And what I've just found that, and I'm the type of guy, I just want to do more of what works and less of what doesn't. I don't really care who's, I don't want to offend anyone. I'm not a fan of, some personal, stock touting system or whatever. If something works, then I'll acknowledge it. But, coming to the basic conclusion, 13 EMA, 30 SMA is just really the culmination of my entire career, where I've just literally put these tools together just based on my own personal experience in the marketplace. And the weird part about it is you're probably never going to see for the rest of your life someone else use these moving averages. In fact, I was really surprised when an old market veteran dude that I like to follow, his name's Walter Drenner, I think it is. And he was going through all his screens, 13 EMA, look at these 13. And I'm like, holy shit, you're the first guy I've ever met who uses 13 EMA. So now, and it turns out he's an old gnarly technician dude. So maybe there is something to it. I don't know. But this moving average relationship, it keeps you out of a lot of trouble. And actually, we did this weekly 13 EMA, 30 SMA relationship on the S&P 500. I used to run this model just to simply tell investors where to buy and where to sell the stock market. And it works wonderfully well as an investor tool. Here, this is a weekly chart. And maybe we'll just finish off with this. Like I said, there's not a heck of a lot of new price action ahead of the Fed. So, we'll just do a quick overview of the corn. Sitting at this sort of pivot point. If we inside bar fail here, then that'll mean we'll lose these moving averages. And my hunch is they probably cross lower. And again, remember we said that's the original market structure fail level. If institutions did want to get short off of this, they got to engineer a counter trend rally, get some clown over there in Asia to force everybody in his country as a totalitarian dictatorship to go and buy crypto. Oh my goodness. Maybe that event needed to happen to both relieve the oversold condition, but also, get the public all rah bull. Oh, we got to buy, and they're just walking into a trap. We'll see how this goes. Only time will tell. Lower time frames, I was putting out these tweets saying, if this is trend continuation, I'd like to see 3 higher lows. We had 1 low. We had 2 lows. Then that was broken by this, so we're back to 2. Then this low is broken, so we're still at 2. So interesting how we're right against this trend line now. We're heading into this Fed announcement, which is in about a half hour, 45 minutes. And we have to break out of this trend line. Now, if this thing's a bull, then we want to see that third, or the second low, rally away, break the trend line, make a third low, and then pivot up. So, we're probably within 24 hours of some sort of resolution of this. And, of course, if we lose these lows, then the whole bot and trend continuation idea is off the table for now. So, things are developing here. This is interesting. And, again, sort of sell the rumor, a risk asset ahead of the Fed. Fed makes its announcement. Let's watch what happens a full hour after the Fed announcement. And then, of course, Bitcoin trades 24/7, so after New York is closed, we probably are going to see some really interesting price action overnight here. Okay, so kind of an interesting direction we went with the daily brief today. Sorry, daily brief recap, but hopefully you got some good value out of this. We'll just finish off this video with just an illustration of this very simple moving average system that just sort of keeps you out of trouble. And you can see bull, and this is the weekly price chart on Bitcoin, bull when they cross bullishly. And you can see that this bullish cross actually happened way over here on this original breakout. So bull the whole way up, went bear right here, bear the whole way down, went back to bull over here, and now we're, what are we going to do? Then I just sort of said a moment ago, if we look at the S&P 500, just apply this same logic. you can see, and I actually used this through this 2007 market to call the top here. And actually, I was really proud of myself for that. It's a great, great call. So in essence, you can see bull, huge bull, a little bit of a bear, bull, bull, a little bit of a pause, then huge bull, then bear. Look at that. October 2007, this signal got you out of the market. Bear the whole way down and got you back into the stock market in May of 2009. So you actually missed that whole bear market. Then you can see this thing bull the whole way through, all the way up. Then through 2015-16, pause, then back on the bull. And you can see this thing's been bullish the whole way up. Then last fall with that big January thumping, it went bear. Notice it got you back bull basically at the same levels, and it's still bull. So it's a great, great trend identification tool. Okay, why don't we leave it at that? Have yourselves a great day, everybody. I got to head off and teach a class now. So all the best. And, of course, tomorrow's video should be really interesting on the other side of the Fed. All right, have yourselves a great day, everybody. All the best. And the only thing left for good old Brian to say at this point is a big bye for now.